You're welcome to Business 360, reaching you from the beautiful hills of Ibiako Oran. Well, I am Edidion Martin. With the IMF reducing estimated global economic growth to 3.4% for 2022, central banks have now resorted to increasing money policy rates to beat the rising inflation. Well, with this in mind, we will begin our Business 360 outlook from the much anticipated U.S. Fed rate hike. The U.S. Federal Reserve has enacted its second consecutive 0.75 percentage point interest rate increase as it seeks to tamp down runaway inflation without creating a recession. In taking the benchmark overnight borrowing rate up to a range of 2.25% to 2.5%, the moves in June and July represents the most stringent consecutive action so far. During the regular press conference, Chair Powell said he could not predict monetary policy range for the next year and that next decision will be data dependent. While the Fed's fund rates directly impacts what banks charge each other for short-term loans, it feeds into a multitude of consumer products such as adjusted mortgages, auto loans, and credit cards. Well, let's hear what Powell has to say.
Today, the FOMC raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate.
There is an FTC that seeks to block Meta's acquisition of the popular app called Within Limited. The Federal Trade Commission right now is seeking to block the virtual reality giant Meta and its controlling shareholder and CEO Mark Zuckerberg from acquiring Within Unlimited and its popular virtual reality dedicated fitness app, Supernatural. The agency alleges that Meta and Zuckerberg are planning to expand Meta's virtual reality empire with this attempt to illegally acquire a dedicated fitness app that proves the value of virtual reality to users. Meta, formerly known as Facebook, is already a key player at each level of virtual reality sector. The company's virtual reality empire includes the top-selling device, a leading app store, 7 of the most successful developers, and one of the best-selling apps of all time. Well, according to FTC, the Bureau of Competition Deputy Director, John Newman, he said, instead of competing on merits, Meta is trying to buy its way. Well, in the meantime, the owner of Facebook and Instagram was hit by a fall in advertising sales in the 3 months of July, which caused the first year-on-year revenue decline in the firm's history. Meta's total revenue slipped 1% to $28.8 billion, but the company fended off a decline in users. Analysts fear that the company's growth may have peaked after years of large gains, and rivals such as TikTok's have eroded its popularity, while more firms are competing for ad spending. Meta, which typically commands more than 20% of the global ad market, warned investors that ad sales were likely to fall again in the months ahead as e-commerce spending falls from its pandemic boom and companies worry about inflation and the war in Ukraine spend cautiously. Let's look at the gas market, actually the energy market. Gas prices are soaring right now as Russia has cut supply to Germany. Gas prices are soaring further due to further cuts by Russia to Germany and other Central European countries. Russia has been cutting flows through the Nord Stream 1 pipeline to Germany, with it now operating at less than a fifth of its normal capacity. Before the Ukraine war, Germany imported over half of its gas from Russia, and most of it came through the Nord Stream 1, with the rest coming from land-based, reduced to just over a quarter. Russian energy firm has sought to justify the latest cut by saying it was how the maintenance work. The German government, however, believes there is no technical reason for it. To limit the end of the year, the UK will not be directly impacted by disruption as it imports 5% of its gas from Russia. However, it will be affected by price rising in the global market as demand increases. Well, at this point, due to the cuts by Russia, is a little volatile. Let's look at the gold market. Gold today in the previous session, as Federal Reserve's Chair Jerome Powell said, gold edged towards a $1,740 an ounce today in the market, as after jumping 1% in the previous session, as Federal Reserve Chair Jerome Powell said it will become appropriate to slow the pace of interest rate increase depending on the inflationary and economic outlook. His less hawkish remark weighed on the dollar and treasury yields while supporting bullion prices. The U.S. Central Bank on Wednesday, which was yesterday, raised its policy rate by 75 basis points for the second straight month to combat surging inflation, as widely expected. Meanwhile, the World Gold Council lowered its outlook for physical gold demand in the second half of 2022 amid slowing growth in the biggest markets, with China and India facing economic headwinds. The WGC, that's the World Gold Council, also warned of weakening investments demand due to aggressive global monetary tightening. Well, let's also look at the gold markets, actually the metal markets. Looking at the metal, you can see that gold, in fact, the whole of the metal market right now has actually appreciated, starting with gold. Gold right now is selling at $1,749.18. We can see an appreciation of 11.85 basis points. That's just in one day, 0.68 appreciation. We can actually see that the energy market is doing fairly good. It's all greens. We're seeing silver doing great as well, with an increase of 1.53%. Copper is also selling at $3.4725 per ounce as well. And we're also seeing an increase of 1.39%. You can see ore is doing well. Lithium is doing absolutely great. It's not really going up, it's not really going down. In the market, we would say this is a little bit stable, but we would say it's also good. It's actually selling at that price right now. Well, away from the energy markets, we'll go for a breather. When we return, look at Nigerian stories. Just stay with us. Well, thanks for staying tuned. We'll begin our Nigerian stories with the excess crude account that has plunged due to the economy bleeding. Nigeria's rainy days funded from oil revenue has plunged to $376,655 at the end of June from $35.37 million in May, amid limited crude exports, biting fuel subsidy, piling debts, and a struggling economy. The Accountant General of the Federation released the figures but did not give a reason for the steep drop, a change of approximately 10,000% in 1 month. Nigeria, typically Africa's largest oil export, has struggled to benefit from surging crude oil prices due to pipeline theft and years of underinvestment that have limited oil exports. Fuel subsidies have also sapped state coffers, including the excess crude account. And in the first 4 months of this year, Nigeria's debt servicing cost outpaced public revenue. Well, in the meantime, the Federal Economic Council has approved the leasing of 3 aircraft for the commencement of operations for the new national carrier, the Nigerian Air. The Minister of Aviation, Hadid Rashika, disclosed this to Government House correspondents at the end of the FEC meeting presided over by President Muhammadu Buhari in Abuja. He said the Nigerian Air will begin operation on domestic routes using aircrafts made by Airbus and Boeing. The minister also asked Nigerians willing to acquire part of the 51% available for indigenous investors to declare their interest. Recall that the federal government had in November last year said that Nigerian Air will begin operation in April, which was later pushed forward to July. Well, July is about rounding up. Let's see how that goes. Reports say there are indications that multiple checkpoints and extortion of truckers are pushing importers and other investors to neighboring country ports, thereby depriving Nigeria of the opportunity to earn income. The chairman of the Association of Maritime Truck Owners, Amato, Remi Ogungbemi, stated this at a stakeholders meeting organized by the Maritime Anti-Corruption Network held in Lagos. Ogungbemi emphasized that multiple checkpoints along the port corridors have also led to financial loss, bankruptcy on the part of importers and truckers, arising from the diversion of containers and cargoes and trucks. He said there is also an increase in price of imported commodities arising from unauthorized payments at multiple checkpoints and extortion along the port's corridor. According to him, over 30 illegal checkpoints exist between Apapa and Tinkan Island ports corridors, where truckers are compelled to pay between 50,000 naira and 60,000 naira per trip to access the ports, despite having valid electronic call-up tickets. Well, moving away from issues with the federal government, let's look at a private firm, Boa Cements. Other investors are worried due to threatening increased cost. Boa Cement, owned by a billionaire Abdul Samad Rabiu, has reported its revenue grew by 51.7% in the second quarter of 2022. The report indicates that during quarter 2 this year, Boa Cement generated 188.56 billion naira, surpassing the 124.27 billion naira the manufacturer had grossed as revenue in the corresponding period last year. While the company doesn't have an issue raising revenue, its financial problem raised its head as a result of management's inability to cope rising production costs, which is eating deep into Boa Cement's revenue and sinking its profits. Well, this threatens shareholders' investment growth. Analysis of the company's financial statements showed that cost of sales, which represents cost of production, rose by 47.3%, growing almost as high as the revenue and gulping the whole of its profits. Analysts say the impact of the rising cost and the management's inability to find ways to reduce its expenses was felt in the profit after tax, despite growing by 41.4% to 61.36 billion naira in quarter 2 this year, surpassing 43 billion naira in quarter 2 2021. There was nothing left in the profit to share. Of course, I would not conclude Business 360 without looking at the capital market as at yesterday. This sets the pace for today, like I always say. The equity capitalization in the Nigerian capital market dropped by minus 0.50% at the close of trading, as the equity capitalization was down by 136.8 billion naira from 27.20 trillion. Also, the all-share index dropped by 253.82 basis points to close at 50,188.55. FCMB led the gainers with 0 naira 10 kobo to rise from 3 naira to 3 naira 10 kobo per share. NASCON share also gained alongside Nigerian breweries, Julie and Echo Corps also gained. Prestige topped the losers chart alongside Jay's Bank, Custodian, Mayor and Curtis share depreciated to top the losers chart. Investors traded 829.51 million shares worth 4.10 billion naira in 4,977 deals yesterday on the floor of the capital markets. Well, at this point, I am delighted to say Business 360 has come to an end. However, stay tuned. The news is up next. Till I come your way again tomorrow with more business information, I am Ididion Martin. Enjoy the rest of the day's broadcast.